Bitcoin pumping higher, Ethereum pumping higher, stocks pumping higher. Just what the heck is going on? I want to start this conversation by zooming in here on the 4-hour charts for Bitcoin. We can see currently Bitcoin up around $16,700. Nice little rally, of course, from the lows of $15,500 the other day. We did see a nice breakout starting on the 23rd, coming up here to the 50-period exponential moving average, finding resistance there, coming back down and actually retesting, as this orange line here shows, retesting the resistance here from the 22nd as a line of support, then moving higher as a technically bullish move. We can see it now breaking out beyond that 50-period EMA here on the 4-hour charts. Now, if we zoom out to a much bigger time frame here on the weekly charts, also some interesting things starting to form up here. So this orange line here is the downtrend line. Now, this is not on the logarithmic charts. This is on the linear charts. I prefer the logarithmic. Kind of gives us, I think, a more smoothed out view over time. And on the logarithmic charts, we have still not had a breakout of the downtrend. But the linear charts are sort of an earlier indicator here for us that we could see some kind of potential movements in the market towards a more bullish scenario leading into next year. A lot of course, sentiment online would tell you that no, that's definitely not going to be the case. We're going down to much, much lower prices. But just look at the charts here. We can see we had this downtrend line. We did break out of it without a whole much excitement, let's say. It just kind of went sideways and then blasted right down. Blasted down, by the way, to retest this line right here. Now we're, of course, moving up very slightly from that. Nothing dramatic happening when you zoom out to the weekly charts here. The dramatic move, of course, was the drop from 21,500 all the way down to, 15,500. That was the dramatic move here in the markets with the FTX collapse. Right now, seeing the markets trying to get some kind of recovery coming in. Also interesting here, if we just move this line like this, we can see that we've actually got a bullish divergence here on the weekly charts for Bitcoin. So that means we had our low price here back on the 13th of June, then we had a lower low for Bitcoin, the lowest price of the year, of course, but that lower low for Bitcoin coming in the first week of November. Now, interestingly, this coincides with a low for the RSI, which happened back here in June, and then a higher low for the RSI happening currently. That is what we call a bullish divergence here for the RSI. Also, one other interesting chart here to take a look at. This is the Bitcoin balances on exchanges. As you can see, it just keeps dropping. Very precipitous drop ever since the FTX meltdown started. But people are continuing to move their Bitcoin off exchanges. It's not just that initial rush towards the exits from the FTX meltdown, but people just generally being more suspicious of their counterparties, of where they're leaving their Bitcoin sitting right now. And people are taking that opportunity to take their Bitcoin into their own hands right now. I love to see it. This, again, I believe was the high water mark. We'll never see more Bitcoin than that on exchanges, probably ever. We will just continue to see this downward trend as more people acquire Bitcoin, put it in their cold storage wallets, and just let it sit there. Now, we do have some nice charts we're looking at today, some cool price action going on, and I like that. I like to see that rally after so much pain in the market over the last couple of weeks. It gives people a little bit of hope to cling on to. But, let me rain on the parade a little bit, because we cannot forget that Genesis could still ruin the party. Let's hope that Barry Silbert manages to sort something out here for the digital currency group, for Genesis, and that we avoid this potentially catastrophic meltdown of Genesis, which again is one of Bitcoin's biggest over-the-counter trading desks and also a massive lender in the crypto space. Digital currency groups invested in over 200 companies across the cryptocurrency market, and they also manage the Grayscale Bitcoin Trust, which manages 635,000 Bitcoin, along with 3 million Ethereum. The fate of all of which is still up in the air. So, while I am, again, digging this current rally in the markets, let's just keep very soberly aware that this situation has not yet resolved itself. Chris Berniski here of Placeholder VC, he says that he tends to agree with the statement that the whole Genesis Grayscale digital currency group saga will get positively resolved. We probably touched the bottom at 15,500, and we'll probably revisit the $18,000 to $20,000 zone, maybe even $17,000 to $22,000 zone, and stay there for the entire Q1 of 2023. Chris saying, yeah, tend to agree. We close out the end of year higher with a hated rally. That hated rally is the rally when everyone's on the sidelines, everyone's expecting lower prices, everyone's shorting the market, and then the prices blast higher. As we so often see, bucking the trend of what most people think is going to happen. Again, it all depends on this whole situation being resolved positively. We don't have an indication that's exactly what's going to happen yet. Now, before we break down the Ethereum situation and what is happening in the equity markets, just a reminder, if you are a trader, to get yourself an account over on Bybit. It is the best place for trading a huge range of cryptocurrencies. Bitcoin, Ethereum, they got all the hot stuff. 0% fees for trading on their spot markets and up to $30,000 in trading bonuses by using that link down below in the description. So check it out if you are a trader. Now, real quick look at Ethereum here as well. This is also on the 4-hour charts. Ethereum staging a little bit of a breakout here on this downtrend that we see. That also, again, lines up with the 50-period exponential moving average here on the 4-hour charts. So pretty interesting to see that little breakout forming up here as well. Obviously, logical next step then becomes up here around the 100 exponential moving average, right? So again, all of these rallies in crypto right now can be derailed by the Genesis situation. So I'm excited to see these rallies. I'm happy to see these rallies happening, but we cannot forget about that. Now, why have stocks and crypto both been rallying today? Well, it's because the Federal Reserve meeting minutes were released. And basically, those minutes said two very, very important things. One is that the terminal rate, that is where they're going to stop raising rates, likely to be higher than previously anticipated. So previously they were talking about 4.5% to 5%. Maybe we're going to go above that 5% mark, which is a pretty big deal. But more importantly, which got the market very excited, they said they're going to slow the pace of rate hikes very soon. So maybe even in the next meeting, we're not going to get a 0.75% hike. We might get a 0.5% hike. And then again in January, and then maybe in February, we go down to 0.25%. And in March, 0.25%. And maybe in April, no raises at all. Or maybe just another 0.25. So this is the direction the market's heading in, right? This is what is getting the market excited right now, the potential for the slowdown in these rate hikes and eventually a stop in those rate hikes. That did send stocks surging higher. So again, unsurprising, we have massive correlation to the equity markets. If you want to know generally what is going on in crypto, just go and look at the S&P 500 first, because that's probably going to tell you what's happening with Bitcoin and Ethereum, except for we see these events like what happened with FTX and the big meltdown there. So more often than not, we just follow along with what is happening in the equity markets. We just move faster up and faster down, which is, the fun of crypto, right? Interesting to see this rally going on for the S&P 500. See if that comes into the end of the year or not. Getting closer to the major downtrend line here for the S&P 500, we can see here that would bring us up to around 4,100. So right now, the S&P 500 is struggling to get above its 200-day exponential moving average. That's the dark blue line that you see on the chart here. That is currently where the price is struggling to try and claim over. We can see previously on the 15th of November, that's where we got rejected. A move higher up to 4,100 will get us back up to this downtrend line right here, a break over that. That's when things could start to potentially get exciting for an end of year or into Q1 rally for the stock markets. We shall see, of course, how that plays out. Previously, these moves over the 200-day exponential moving average, as we saw here in March, but also here in August, have been short-lived and basically got up to that area of the downtrend before getting smacked back down. Also interesting to note in all this relatively bullish action in the risk markets is that the dollar index falling. Look at this, dollar index on the verge of falling under the 200-day exponential moving average. That would be the first time it has happened in a very, very, very long time and might definitively spell an end, hasn't happened since mid-2021, might definitively spell an end for this massive dollar rally that has really been so much of what 2022 has been all about. So we can just see this start of the year rally, and I guess a way to finish off the year would be for this dollar rally to definitively go under. Anyway, that's all for me for today. Subscribe now if you're not subscribed yet, and I'll see you next time.